Have you ever found yourself hunting for that one perfect strategy, that magic formula that's going to make you a fortune in the markets? Well, if you have, you are in very good company. But what if that very search is the one thing that's actually holding you back? In this explainer, we're going to dive into the art of forecasting and why maybe, just maybe, embracing a little imperfection is the first real step towards success. You know, this quote really just nails it, doesn't it? We get so wrapped up in complex systems and expert opinions, but what if the real key to understanding the market is something obvious, something that's been hiding in plain sight this whole time?
Let's be honest for a second. The idea of a holy grail of investing, a secret key to guaranteed profits, it's incredibly tempting. So many of us start our journey looking for exactly that. But here's the kicker. What if the search itself is the trap?
Okay, so let's talk about this search for the Grail. Why are we so obsessed with finding it? And why does it always seem to be just out of reach?
All right, here it is, the hard truth, plain and simple. There is no holy grail. And look, that's not because the markets are totally random. It's for a much more interesting reason. It's because they're human. They are driven by our collective psychology, our hopes, our fears, and let's face it, our often irrational behavior.
You know, this isn't some new idea. A guy named Garfield Drew figured this out way back in the 1940s. A stock's price isn't some clean scientific calculation of its intrinsic value. Nope, it's a reflection of what everybody thinks it's worth. It's a popularity contest, really.
And that brings us to what we can call the market's human heart. If you really want to understand why no single system can work forever, you've got to understand the different kinds of people who are actually making up the market at any given time. So, check this out. Imagine a company has 3 shareholders. You've got a long-term investor, a 6-month speculator, and a short-term trader. Now, suddenly, bam, the CEO resigns. Who do you think reacts? Well, the investor, they're in it for the long haul. They probably don't even blink. The speculator, could go either way. But the trader, you can bet they're making a move. They are almost guaranteed to react. And see, here's the thing. The mix of these different people is constantly changing. One day, a stock might be dominated by those calm, long-term investors, and the next, it's a playground for frantic traders. Because this personality is always shifting, how could one single rule possibly predict its behavior all the time? It just can't. So when the market gets confusing, what's our natural instinct? We turn to the experts, right? And this is the first false holy grail we all chase. But as you're about to see, even the smartest people in the room can get it spectacularly wrong. Just listen to this quote. It's from one of the most respected economists of his time, Irving Fisher. He said this in October 1929, just brimming with confidence in the market. He was the expert, and you better believe people listened. And what happened immediately after his prediction of a permanently high plateau? Total and complete collapse, the Great Crash of 1929, which ushered in the Great Depression. I mean, you can't make this up. The expert's timing couldn't have possibly been worse. And he was not alone. You had the giants of industry, Rockefeller, Ford, all saying the coast was clear. Even a market analyst who correctly called for a dip completely missed how devastating it would be. The expert consensus was just dead wrong. In fact, if you look back at history, there's this fascinating, almost backward pattern. When all the experts as a group get overwhelmingly bullish, it often signals a market top is near. And when they're all predicting doom and gloom, that's often the absolute best time to buy. So following the expert consensus can be one of the most dangerous things you can do. All right, so if we can't trust the experts, what about a perfect system? This is the second false holy grail. This idea that some magical algorithm can remove all the messy human error and just deliver instant wealth. But come on, let's just ask a simple, logical question here. If someone really invented a machine that prints money, why in the world would they sell it to you for a few $100? Wouldn't they just use it to become a billionaire themselves? It just doesn't add up. And this leads so many of us onto what you could call the holy grail hamster wheel. We get all excited about a new system. It works for a little bit, which feels great. Then the market changes and the system starts losing money. We get dejected, we ditch it, and we start searching for the next perfect system. It's an endless and really expensive cycle. And you know, these systems fail for very predictable reasons. Their past results are usually unrealistic, ignoring real-world trading conditions. And most importantly, They're built on a past that's never going to repeat itself exactly. The market is a living thing. It evolves. So, if experts and systems both fail us, where does that leave us? This brings us to the most powerful idea of all, the wisdom of imperfection.
This quote is so profound. Just think about it. If a perfect buy signal actually existed, everyone would use it at the exact same time. The price would instantly jump and the opportunity would vanish before you could even act. The only tools that have any real value are the imperfect ones, the ones that require skill and judgment to use.
And this is the big shift in mindset we all need to make. The goal isn't to be right every single time. That's impossible. The real goal is to build a resilient approach, an art, not a science, that just puts the odds in your favor over the long run. It's about discipline, patience, and a whole lot of self-awareness. So the ultimate takeaway is this. True success begins the moment you stop looking for a perfect solution out there, and you start working on the skills and the emotional control in here. So the final question is really this. The market is just the arena. The real opponent is your own fear, your own greed, and your own impatience. The greatest battle isn't beating the market. It's beating yourself. Are you ready for that journey?